In this video, I'm going to show you how to use inefficiency and how to get entry models into a swing trade. So in this case, you can see this is our low and then we'll have this high. And so far you can see price has been trending to the downside consistently. And then we came to the downside right here and we'll have this inefficiency right here. And as you can see, the overall 3-month structure, low and then high right here. So if we come into this key level, all you're looking for is a daily shift to market structure. Now we'll go to the daily time frame. Now I'm going to use this bar replay so that we can just focus on the parts where price tapped into that key level. Now right here, you can see we made this high, made this low, and then you can see this right here. This high right here, we dropped down, creating a new low. Now this high right here is our key level that we want to see price rally above it. And right here, you can see that nicely. The moment price rallied above this high, closed above it, all our focus is going to be on buys. Now, what are we going to focus on for buys? Now, this last down close candle, this was the last down close candle before this expansion that broke structure. So that is why this key level from the body of the candle is going to be our point of interest. So we're going to put our limit order right there, and then the overall low is going to be our stop loss. Right here is going to be our stop loss, and then we'll put the stop loss right there. And then as you can see, nicely price came in and tapped us in. Now this is basically a swing trade for people that have very busy schedules. You can go to the weekly and look for areas to you're going to exit the marketplace. So because this is a 3-month time frame, so it's a very big time frame. So what we're going to be looking for is also a big time frame to use as our exit. So right here, we use this as our exit position. And as you can see nicely, price is going to tap into that key level and then take our take profit position. So right there, you can see it. So you can see price tapped into it the first time, and then the second time, price has tapped into our take profit position. So if you were on the trade, it would have smashed the take profit and you would have made money. So if you were risking about $300 on this, you would have made $1,330. And this is basically a big swing trade, and it's the kind of trade that you can actually put $300, risk $300 on it to make $1,330 without having to check your chart every single second. But there are other ways that you can also maximize this kind of positions, and I'm also going to show you how to do that. So when price hits this zone, how you can maximize that position. And how do you do that? We'll go to the daily time frame. Now on the daily time frame, all we want to see once price hits this key level, all we want to see is one, you just count the same way I told you, you count 1, 2, 3. You want to see a 30-minute shift to market structure from this key level, or you can use a 1-hour shift to market structure or a 30-minute shift to market structure. Any of the two works just perfectly. But in this case, we're going to try using a 30-minute shift to market structure. So right here, you can see very nicely, this is a high right here. You can see this high, price created a high here, and then we created a low right here, and then we have this break of structure right here. You can see the break of structure. So the moment you see this break of structure right here, this inefficiency is your entry position. So you use the inefficiency as your entry position, and you can see how price tapped in nicely. And then you can use the low. You can use the low as your stop loss. Right here will be your stop loss. And then you take it same key level, same place that you are anticipating for it to go to from the 3-month time frame. So right there, we'll go to daily so we can expand this a bit more. So in this one, you're risking $115. You can risk $115 or less. So basically, this is just an example that I'm giving to you. Now, still targeting the same place. So if you're risking $115, you are targeting to make $1,228. And now let's watch and see how that plays out. So you can see price came very close to the take profit, rejected, and then smashed the take profit. So right there, you would have made $1,228 while risking $115. So this is basically how you can swing trade the market while holding a full-time job, or you have other activities. You can basically do it this way and make some money off the financial market without being consistently on the chart. And in the next model, I'm also going to throw more light and also show you more examples of how to do this. And I'm also going to throw more light and explain a lot of other intricacies in the marketplace. So stay tuned.